The stock market is dead and Gonzalo Lira is alive. Today is a good day for the good guys. I have been more blasé about this ongoing market crash, than I have about any dip in the history of this YouTube channel, which is not all that long. I mean, I started, like 28, or no, I think I started Q1 of 2019. So I've not been around doing this YouTube stuff for that long. And I started this channel when I thought the business cycle was already long in the tooth. I mean, it was 10 years old at that point. We bottomed in 09. Economically. The housing market bottomed in 12, but the economy bottomed in 09, and, that's well past the life expectancy of your average business cycle. So I was ready for the new financial crisis when I started this channel. And so I kept thinking, and I knew it was necessary. It's not that I cheer for people to lose money. It's that we have these big, massive, economic bubbles that the Fed blows, and then eventually it's got to pop. That's just how you get back to normal. I'd rather they not blow the bubble to begin with, but once they've blown the bubble, I root for the pop, because the longer that we go without the pop, the worse it's going to be. The crash, if it really happens this time, is going to be a lot worse than it would have been way back in 2018, 2019. And so that's why I feel no remorse rooting for stonks to crash, for bonds to crash, for real estate to crash. I want Powell to let it crash and burn, but he just won't do it. At least he hasn't in the past, and that's why, I'm not getting my hopes up this time. But he's letting it go pretty darn far. He hasn't started hedging his bets yet. He is still talking like they're going to hike rates. And again, this is all, think about it. Peter Schiff made a good point today on Twitter. This is all the damage that the Fed has been able to do just by talking about hiking rates. I mean, all they did was, a quarter, 25 basis point rate hike. That's all we've done. All this is talk. A quarter basis point rate hike, in and of itself is meaningless. But the talk of rate hikes, that's what's bringing the market down. Now, of course, you have Janet Yellen, the Treasury Secretary, who, is loyal to the Biden administration. That's why she is a cabinet official. She's making the case now that inflation has peaked, trying to imply that maybe rate hikes won't be necessary. At least not as necessary as somebody like Bullard is saying. Bullard, of course, is rooting for multiple 75 basis point rate hikes. I think I also heard that Bullard threw the number 3.5% of Fed funds out there by the end of 2022. That's impossible. I mean, 3.5 Fed funds, that would be literally the end of the world. It'd be well beyond the end of America. That would be the end of the world. You think, all this stuff about Putin and Ukraine and Europe trying to stop buying Russian oil, you think that is damaging to the global economy. My God. Let me introduce you to a 3.5% Fed funds rate. That's nothing compared to that. America's zombie economy, which is intimately connected to the global economy for financial reasons, would default in short order, in a matter of months rather than years. Hell, maybe even weeks. Now, are the declines in the stock market really that big? No, not really, not considering how many times the stock market has doubled in the past few years. I remember pretty vividly, not too long ago, in 2020, when it would have seemed like a big move if the S&P could just get back to 2,800, because it was down at like 2,200, I think, at the bottom in 2020. Now we're talking about, oh my gosh, the S&P has fallen so far, it's below 4,300. So just to give you a little perspective, in order for us to fall below, just to go back to lose the gains of the last 2 years, the S&P would have to be cut in half. You would still preserve all the gains of the last, decade plus. That's not putting you back to 2008 levels. 2008 levels was in the triple digits. Or I should say March of 09 levels were in the triple digits. So So we're not actually talking about shaving that much value out of the stock market, when you consider how much time it's been. I mean, 2 years worth of stock market gains? That doesn't sound like a whole lot. I mean, think about what you would have gained, off of 2 years of holding a junk bond. You would have gained 5% for each of those 2 years. But nevertheless, even if people don't have to pay attention to the baseline, to how much they've made in the stock market, to be affected by it. And in fact, for a lot of people, it doesn't even matter because these people were not in the stock market in March of 2020. The reason why you're starting from such a low baseline, if you look back 2 years, is because that's when everybody got out of the stock market. So there weren't a whole lot of people left in it. The people who were left in, who stayed in and wrote it out, and of course are now up now, those are the people who are up so much. A lot of these people may not have gotten back into the stock market or gotten into it at all until, like, let's say we were at SPX 3500. A lot of this, we had one final push, from the retail crowd going in saying, hey, the only way to make money in this society is to buy stocks, and so I'm going to buy them, even though they're more expensive than ever. They just keep going up no matter what. The Dave Portnoy fans, that whole crowd. When retail gets the wind knocked out of them, when retail loses their shirt, that's going to have an impact. Not only are these people going to sell, they're going to stop spending so much money. That is what Powell's ultimately after here. He's trying to, I think, he's trying to shake the retail folks out. Because if you think about it, we had massive asset price inflation for a decade in this country. And consumer price inflation, official CPI, again, keeping in mind this is just the official number, was tame, around somewhere between 1 to 3%. And so if you're getting 10 to 20% in the stock market every year, and the side effect of that is like a 2 to 3% CPI, that's a pretty good trade-off if you're the Fed, because you're looking at look, we're enriching all our buddies who own stocks, and we're keeping inflation somewhat stable. But what happened, I think, partially, other than the federal government just, vomiting of money into the American economy by running, the massive budget deficits, trying to replace all of the economic activity and GDP that was lost through the lockdowns. Other than that, you had this phenomenon of retailer investors who are piling into the stock market, really from 2020 on, because the stock market only moves in one direction, and they realized, hey, if I put my life savings in here, it'll get bigger. If those people, if we just reset stock prices back to, mid 2020 levels, and those people lose their shirts, there's going to be a reverse wealth effect unlike the world has ever seen. All these Uber drivers who put their life savings into the stock market, a lot of them, if they didn't, if they didn't try to do really dumb day trading strategies and just, let's say, bought SPY or something, vanilla like that, they're feeling pretty confident. They're feeling financially secure. And they go out every week and they spend every dollar of their paycheck as fast as they can. Partially because inflation is going up and they know, hey, if I don't buy this now, I'm not going to be able to afford it later. But secondly, because they do feel like they have a bit of a safety net, perhaps because of their investments. Maybe it might be as little as like $3,000, but $3,000 that might cover some kind of emergency thing. But if they could sell their stocks if they need to, and in the meantime, their stocks are going way up. If they somehow lost their job and couldn't find another one, even though this is an extremely tight labor market, they could cover a month or two of rent. But if that evaporates, if they lose all their gains, that calculus will change. All of a sudden, people will move to try and restore those lost savings. That's the goal of the Fed right now. It's not that he wants to wipe out Wall Street. It's that he wants to wipe out retail. Because the inflation, I think, if you try and think of this like the Fed folks, this inflation didn't come. Not saying that this is a direct causal link, but the correlation here is clear. Retail investors come into the market. They give one final push. They send the market to new all-time highs over the last 2 years. And then we have a problem of ever-accelerating inflation thereafter. Because ordinary people are benefiting from the gains in the stock market, and this isn't everybody, but this is a certain subset, that is going to lead to increased consumption. It is going into their pockets. The stock market is adding to their buying power. And again, this doesn't mean that this accounts for all the inflation. Certainly not. I think that the federal budget deficits are the main driver of your inflation. If the federal government, I know this is a dirty word and it would never happen anyway, somehow ran like a balanced budget, inflation would disappear overnight. But nevertheless, consumer goods prices go up because consumers have more to spend. And it is true that if you squeeze consumers and you drain their savings or erode their savings, which is tied up in financial markets, they're going to consume less. They're going to be poorer. And all else equal, that will contribute, that will have a net deflationary impact. But that does not mean that it is going to make inflation go down or even slow down. But if you neutralize all the other factors contributing to inflation and set them at zero, wiping out the retail investor will have a deflationary effect. Because we did see a lot of consumer price inflation as a result, I think, of the financial bubble. It was limited to the kinds of items that are purchased by asset holders, by natural asset holders. You know, your elite folks. Things like private jets and yachts. There was massive inflation and of course luxury real estate, massive inflation in those areas. But it wasn't until we had this flood of retail after 2020 or during 2020 and on that we started to see widespread consumer price inflation really pick up. So much so that it is making it past the government censors, whose job it is to mask inflation, through these tricks like hedonic adjustments and whatnot. But it's happening so fast now, they can't change the rules quickly enough to cover up the true rate of inflation. I think that they're still reporting it much lower than it is in reality. Shadowstats.com certainly would make that case. But nevertheless, even their official number is quite high, nearing the double digits. So based on what we've heard this week from Powell and Bullard, Bullard would not be out there making these cases. He's out there playing the bad cop. That's his role right now. And Powell's playing the good cop. Powell's saying 50 basis points. Bullard is saying 75 basis points, multiple 75 basis point hikes until we get to 3.5%. At this point, what Bullard's saying is a bluff, but what Powell is saying, I think, is meant for us to take that to the bank. And so far, he has not backed down. The next, I think at this point, the next checkpoint we have to watch is when the S&P is down 20%. What will Powell do then? That's been his hard limit in the past. He has, he's softened his stance before that, in the past, but that's when he makes a hard break with the trajectory and insists, no, the stock market's going to go back up. We're going to make new all-time highs when the S&P reaches 20%. He's never allowed the S&P to fall 20% during his entire tenure, from what I recall. I think the furthest it ever got was 18%. So if we cross that line, look out below. But also, because that is such a major line, and Powell has made it a line, and I think he understands that the rest of us will look at that and say, hey, that's Powell's line. That, even right around there, we have to wait for a breakout below 20%. Because, if we go down there, the market might linger for a little bit, waiting for Powell's response. If Powell comes out when the market is still 20% down, and he doesn't relent, that's when we could be down 50%. I mean, I hate to say it's different this time, and that because I have been I've been totally skeptical this whole time, and I think rightfully. I don't regret my skepticism. I hope it's different this time, sincerely. I think that it's surprising how I don't dare use the term hawkish, but that's what people would call it, how hawkish Powell still sounds, and the fact that he's letting people like Bullard speak with any kind of authority. You notice he's not couching people like Bullard by putting, some buffoon like Kashkari or some other ultra dove on the podium alongside him to make, an ultra dovish case. Kashkari would be up there saying, no. I think we need to have rates at negative 2% nominally by the end of the year. He's not putting anybody up there making that case. It's Powell and Bullard this week. I mean, Yellen, all she said was that she thinks inflation might have peaked. It's a far cry from saying there shouldn't be any more rate hikes, but it's the most dovish thing we've heard. And remember, Yellen is no longer the Fed chair. She's the Treasury Secretary. She is, supposed to be a cheerleader for the administration. Now, I mentioned briefly at the beginning of the video, yes, Gonzalo Lira is alive. Very happy to see that. I don't have anything else to say on that. I only know what he has said. I watched the stream this morning on the Duran. He did not talk about it. I think that's a good idea, probably. I mean, the guy survived being arrested by the secret police. It seems like, my guess is because of the pressure and the fact that he's not a Ukrainian citizen, he is a foreigner in their country. It would have looked really bad for them to just whack him, especially when there were that many people who were concerned about him. So it seems like they're going to try and give him a proper show trial, after they do an investigation, and then charge him with like high treason or something like that, and then try and give him the death penalty that way. They're not going to just disappear him at this point. So I can only hope that that buys him enough time for the area he's in to fall under Russian administration. I mean, that's his only hope at this point. Even though he said some not nice things about the Ruskies, I think it's definitely clear that the Russians are going to treat him far better than the Ukrainians will. But the way things are looking, it doesn't seem like the Russians will be marching or raising their flag, I should say, at the city hall in Kharkov anytime soon. So I'm not talking anything about the war today. I just wanted to give that, that personal update. I have to acknowledge the return of Gonzalo. It is something we've all been watching with bated breath. So with that said, I will see you folks back here tomorrow.